in listen-only mode.
Good afternoon, everyone. Thank you so much for joining us today. My name is Catherine. I'll be your webinar facilitator. I'd like to welcome everyone to the Are You Missing Jobs Due to Financing webinar. As a brief reminder, all lines are currently on mute to prevent background noise. If you have any questions during the presentation, please go ahead and type them into your chat box. We'll be happy to answer at the end of the webinar. This afternoon, it's my pleasure to welcome Ben Middleton, National Sales Training Manager. Ben, you may now begin the webinar.
Well, good afternoon, everyone, and thank you so much for taking time out of your busy schedules to join us. Today, we're going to be talking about financing and the way that a lot of consumers are buying today and how you can help your customers to be able to purchase the solutions that you're talking to them about and the solutions that they want to have in their home. The financing partner that we've partnered up with is EGIA, and for those of you that don't know, EGIA is an 86-year-old nonprofit trade association. They got their start with a small appliance group and doing public service announcements and different programs for the small appliances around electrical safety and energy use. And today, they work with a lot of HVAC contractors and with utility companies all across North America, helping homeowners and businesses save money and get involved with products that are going to help them be more energy efficient and in building that. So to get started today, the first thing I like to do when we take a look at the programs and what we've got available is look at our industry and some of the basic of the economic situation that many of our homeowners face. And so when we look at our consumers that are out there today, there's really three different types of customers in the marketplace. We have the cash buyers, those that have the cash but maybe hesitant to write that big check. And anybody that's been in the industry for any amount of time has ran into those customers, and typically you're in the biggest homes, and those are the homes that seem to be the ones that want the least expensive piece of equipment that you have to offer. Because they really need to see the value of what it is that they're buying, and we sometimes have a hard time communicating that. And also, it's just hard for them to part with that cash all up front, all at once. The next group that we run into is the payment buyer. Those are the ones that need the lowest monthly payment to pull the trigger so that they can fit it into their budget. And then the last group that we run into is those that have challenged credit, the customers that would like to get involved with something that we may have available for them, but for whatever reason may not have the credit rating to be able to get involved in the traditional financing that are out there. The one thing that we do know, in any of these three groups, the cash buyer, the payment buyer, or the challenged credit, that customers who use financing on average spend 20% more than the customers that do go ahead and write a check. And that may just be to affordability or also the value proposition that we put out there. So the biggest thing that we can do is take away some of the anxiety about the purchase. We know that the heating and air conditioning is not the most sexy of purchases for the homeowners that we're talking to, and we know that they would much rather spend that money on something else, like a vacation, a brand new car, getting the kitchen remodeled, something that they're going to look at every single day, even though the HVAC system does contribute to their comfort. So we need to make it easier for customers to buy from us. The other thing that we look at, when we look at the American household today, some of the statistics that we've been able to pull by looking at various different sources are this. 75% of the Americans or people that live in North America today are homeowners that live paycheck to paycheck. And this was from a survey that CNN Money did. And what that basically means is when they get paid on a Friday, they're just trying to figure out how to make that check stretch all the way until the next payday that they get. And so when we understand that situation and understand that a lot of people don't have that disposable income to be able to go put down $15,000, $20,000 on a brand new system, that may be a lot of the pushback that we seem to get as an industry when customers are saying, well, show me your cheapest option, or do you have anything else that could be more affordable? So when we don't use financing and don't talk about the low monthly payment, we're shooting ourselves in the foot as far as the options that we can talk to the homeowner about, because they just don't have the cash to lay out. The other thing that we look at is 17% of the average rate across the U.S. of all credit cards carrying a balance. And when we stop and think about this, a lot of contractors that I talk to, when we start talking about financing and different programs are available, the big thing that everybody always tells me is, I would never pay that interest rate. The fact is, if your customers are putting the furnace or the air conditioner on a credit card, chances are they're paying a 17% interest rate on every job that they're financing because we did not offer them some sort of a program or put something out there in front of them. So the reason they did that is because either they didn't want to part with the money today, so they put it on a credit card, or the fact that they wanted to go ahead and purchase it, and they didn't have the cash to be able to buy that system. So that's a kind of a staggering number when we look at it as far as interest rates, and puts in perspective a lot of the programs that we have available to offer the homeowners. The other thing is the average savings account balance for families is $3,800. When we look at this and we look at the overall average ticket for what HVAC systems are, it's interesting that the average ticket for when contractors are selling heating and air conditioning tends to hover right around that $3,200 to $3,500 price tag, and usually it's just a furnace or a air conditioner versus buying a whole entire system. Well, this is because when we don't give the customer the option of financing and being able to buy a whole entire system, the only thing they can do is replace the one component that's broke right now, or the one component for this season that they're going to need. And to look at this a little bit differently, keep in mind, this is the average savings account balance of all families. So this includes the millionaires and the billionaires along with the blue collar worker. So depending on where it is that you may be, those numbers could be skewed depending on which homes it is that you're going out and talking to and the type of people that you're working with. And here's the other number that just kind of puts it all together. 41% of households have no savings whatsoever at all. And so when that emergency comes up, if we don't have financing options available for them, chances are they're putting it on a credit card. They're finding their own financing source that they need to in order to take care of that emergency that just popped up. So when we look at the American household today, and when we're not using financing, we can start to see why we may be losing some of the jobs that we're trying to get, because what it comes down to is the customer really doesn't have a good, valid option if we don't offer them a way that they can afford to have the system in their home. So here's kind of another interesting chart that we look at. The outstanding credit card debt, and we go from 1986 to 2017. We see a small little dip that happened during the recession, but the biggest thing that you can see is we're right back up to where we were pre-recession, and the average household credit card debt in America today is $16,425. So just stop and think about that a little bit, and the amount of debt that people are having there. And 50% of the customers that you're going out and talking to are using credit cards almost all of the time. Only 16% of the customers you talk to use credit cards occasionally. And so those are some interesting things to look at. Customers are using financing on a regular basis. So again, we're missing out on a good amount of the opportunities that we could have when we're not talking about financing and we're not putting those options out there in front of our customers. So the industry norm, when we take a look at our industry today, you see a lot of advertising around 0% financing for 60 months, 0% APR 60 months, and you see a lot of different programs that are a lot of different manufacturers that are advertising these programs. There's some unknowns that a lot of contractors haven't been told about when these programs are out there. They seem attractive. Well, 0% interest, that's the best thing for the customer, and it's over a long period of time. It's 5 years. But let's just take a look at that. So if I looked at a $12,000 system, and I was going to look at that over the course of a 60 months, that would mean that if I was going to divide that over that 60-month time frame, that my monthly payment would end up being, hold on one second here. My monthly payment would end up being $200 a month. One of the things that we found is the average consumer needs to have a payment somewhere of around $100 to $150. That's what they can fit into their budget. So if I have a payment that's going to be at $200 a month, I've just made a lot of consumers unable to be able to afford that system or add that into their budget. The other thing a lot of guys don't think about is if I don't pay that off in the course of the 60 months, all of the interest goes back to day one. And so I'm going to pay interest on that $12,000 balance if I don't have the whole thing paid off in 60 months. And the other thing that a lot of us don't consider with a 0% APR for 60 months, not only do you as a contractor have a buy down, but if that customer misses a payment at any point in time during there, it's automatically going to go back usually to around a 27% interest rate. So there's a lot of penalties for the customer in getting involved in a program like this. And so that's why when we started to look for opportunities and ways that we could help our consumers, we wanted to find programs that were going to protect the customer, take care of the customer, and make sure that that customer was going to get involved in a system that they weren't going to come back to us and say, well, what did you sign me up for? And because any financing program that you get them signed up in, they're going to associate that with your company. And so we look at all the different things, and the last part of it was also the fact that you're going to have a pretty good credit rating in order to qualify for one of these programs. So that's the last thing that we look at with that. So EGIA provides a couple of different solutions for our contractors. And so we have a couple of different installment financing companies that we work with. We work with Interbank, we work with GreenSky, we work with Benji. The nice thing about installment financing is, number one, typically they can help customers with less than stellar credit and help them to be able to get involved into a program. We can offer lower payments and lower interest rates. And the really good thing is, even if the customer misses a payment or two or three, they're always going to pay the original interest rate that you sign them up in, and it's not going to change when they miss one payment. So we protect our customers, and you can take that same $12,000 job, and you could do it over 72 months, you could do it over 120 months, and you could do it at a lower interest rate, and you're going to be under $100 a month, getting that customer a payment that they can afford and allow them to enjoy the benefits of their system. Now, for our customers that maybe have even a harder time getting financed and we can't get them through the traditional Interbank or GreenSky or Benji, we came up with a second look program through Time Payments. And so this is a consumer lease that allows the consumer to be able to use financing when they may have credit challenges or they've had issues in the past. And so this is a really good second look program that is going to allow your customer to get involved with the system and allow you to take care of what you need to do. What I know about most contractors out there is contractors are good people. And we've all been there where it's 100 degrees outside or it's 0 degrees outside and a customer has no heat or they have no cooling. And it's the what do you do? Do we go ahead and replace the system because it's the right thing to do? Do we offer in-house financing to take care of the customer? Or, how are we going to take care of the situation and do the right thing for the customer? Well, anybody that's lived through that situation knows that when you do that, what usually ends up happening is you get a slow pay, or maybe you don't even collect at all, and it becomes more of an act of charity. And most of the contractors that I know, we're not experts at financing and collections and all of these other things. So why not go ahead and do the job and get paid for it, and then allow the company that can work with the consumer to help them make the payments and put together a program that's going to help them do what they need to do. You be the expert at heating and cooling, and let the finance companies be the expert at doing the financing and putting those programs out there for them. And then we also do have a commercial lease option for the contractors that are looking to get involved with more commercial programs. One of the things that we find a lot of the different groups that you may work with, the churches, the schools, and those types of nonprofits usually are not cash rich. And a lot of times they're looking to raise funds, but they may have a project that needs to get taken care of right away. And a commercial lease is a way that you can help them get whatever situation they're in right now taken care of, and then they can raise funds to get that paid off over time. And so you've got a lot of different options available through the many different providers that EGIA has available for you. Now, let's just take a look at the individuals. So I talked about the installment loans kind of from a high level. But the nice thing about installment loans is, number one, it allows us to give the customer lower monthly payments. Number two, you can advertise what matters most to the homeowner. And what do I mean by that? We have one of the contractors that we work with that actually advertises, you can have a brand new air conditioner system installed for under $99 a month. And so you can advertise the payment and be confident that you're going to be able to give that payment because you have a lot of flexibility, and you can advertise that lower payment amount versus nobody can spend a percentage. So if I say that, it's going to be 60 months, 0% interest, what does that mean? I don't know what the actual payment's going to be. And so advertise what matters most to the customer, which is the payment. When we take a look at a lot of the other industries that are out there and look at the automobile industry, what they do is they say you can get into a vehicle for X amount per month. That's the same thing you can do with your heating and air conditioning systems. The other thing that installment loans allow us to do, because it's not a revolving credit line and they don't have access to the money all the time, it allows you the ability to finance a wider profile. So you're going to have higher credit limits that you're able to get access to, and you'll be able to finance people that may have a lower score. So it gives you the ability to be able to offer more solutions to more of the consumers that you're talking about. And like we talked about, the installment loans are going to be less painful for your customers if they ever miss a payment. So the benefit to you as a dealer, none of us as dealers like to pay the different buy-down fees, the different things that we have there. But because of the way that the plans are set up, there are many plans that you can offer in the installment arena that are going to have zero fee to you as the contractor. And so versus the no interest, no payments, which are going to have a high fee or a high upfront cost to the contractor that you have to pay, because the financing company, let's face it, they're going to make money one way or another. And so if they're offering a 0% interest over 60 months, they're going to make sure that they collect that money from you as the contractor up front. They're taking the risk. They still need to get paid. But by using installment loans, you have a wide array of programs that you can offer where you have zero cost to you as the contractor. So what does consumer financing mean to you? Well, financing is going to equal success. When we look at the most successful companies in America today, you look at Amazon, you look at Target, you look at Apple, you look at Southwest, all of these companies rely on financing. And because they know customers buy on payments. And so this gives you an opportunity to get into the retail space and to be able to allow customers to buy the way that they're used to buying today. Face it, when you look at all of the home improvement industries that are out there, whether it be roofing, whether it be windows, whether it be carpet, whether it be furniture, whatever it may be, the larger ticket items that you see, there's some sort of a financing that is put into there that they're offering as far as payments to allow the customer to be able to get the products that they actually want to have. This is the one thing I can tell you about financing. Never, ever prejudge your customers. It's important for you to offer financing to every customer, no matter what the situation. Every car dealership in America, no matter who walks in the door, they're going to offer financing to. They're going to offer financing to the business person that comes in a three-piece suit. They're going to offer financing to the blue-collar worker that comes in off of the line and has grease all over their clothing. So every single financing company that we work with, or every single customer that you get in front of, you need to be talking about financing and the payments that you can offer and what it is that you can do. So this is kind of an interesting slide when we look at it. So which came first? When we take a look at all of our different contractors kind of across the wide spectrum, one of the things that we noticed is contractors that had a yearly revenue of between $250,000 to $500,000 per year, they were financing about 25% of their jobs when we looked at them as a whole and took a look at all those companies. And so that was an interesting statistic that we were able to pull. The next one we looked at was all of the contractors that had revenue between $500,000 and $1.5 million. Well, 40% of their total installed jobs were financed. And we took a look at all of our contracting companies that did $2 million in revenue and above. The interesting thing was 75% of their jobs were financed. So the big question is, which came first? Is it that the contractors that were doing $250,000 to $500,000 a year just naturally financed 25% of their jobs? Or because they offered financing a certain percentage of time, it helped them to grow to that amount, and so on and so forth down the list. The assumption that we're making is that when you offer financing, you're going to see your company grow in revenue. And we'll take a look at some examples here in just a little bit. But here's the other big thing that we found. So when we took a look at all of the different financing programs that EGIA offers, we took a look at all of the no interest, no payment loans that EGIA wrote. And when we looked at all of the no interest, no payment loans, what we found was $5,900 or the average ticket of those loans was $5,900. So we thought that was interesting. We looked at the no interest equal payment loans. So these are ones where the consumer now has a defined payment of what they're going to make. We found out that the average ticket there was $7,700. And when we took a look at all of the reduced APR, so let's say a 999 for 10 years or longer, and we looked at those programs, we found out the average sale there was $10,700. What does this mean? What we found is when you start talking about payments versus talking about the overall ticket, your dollar average is going to go up, because most homeowners think in terms of what can I afford on a monthly basis versus that big ticket number. And so when I offer a no interest, no payment program, the only thing I'm talking about is that ticket, that $12,000 system. When I start talking no interest equal payments, because it's a shorter period of time, we are not able to spend as much, because if they can only afford $150 a month, they're only going to be able to get X amount of system. When I spread over a low interest rate, a 999 at 10 years, which by the way has no cost to you as a contractor, now I can talk about a lower payment that fits within their budget, and the customer is able to spend more money. So low payments equal higher tickets. And this is kind of a paradigm shift from what a lot of the industry and a lot of the manufacturers have been saying out there. They've been saying consumers want 0% interest. No, what consumers want is a low payment. So upsell through the good, better, best scenario. What do we mean by this? So you've got a lot of different financing options available that you can talk to customers about. And so if we look at this particular scenario here, I have a good system. Let's look at a 14 SEER basic system. Total for that system was $6,900. If I use a 999% program for 60 months, for 5 years, and what I'm going to have is a monthly payment of $114.54. If I were to upgrade to a 16 SEER system, now you know what, maybe I'm going to offer a little bit of a different program. And so I'm going to offer a 999% for 120 months, and that one's only going to be $3 more per month. And then if I look at the best system, an 18 plus SEER system, and have all the bells and the whistles in it, and let's say that's going to be $10,400, I can reduce the interest to $699 because I have a little bit more money to play with. And for 120 months, in that particular system, is only going to be $3 more than the better. What's easier, to talk about $2,000 more, talk about $4,000 more, or to talk about $6 more per month? And so when we utilize financing, and we tier our financing approach, it's going to make it a lot easier for us as a company to communicate to the customer how they can afford the better systems or even the best system. What does that mean to you? Well, if I take a look at a contractor, and let's say this contractor has 30 leads coming in. If they're solely on a cash basis, because of the information I shared with you in the beginning, what we know is they're going to have a lower closing percentage, because there's a certain percentage of customers that just will not be able to afford to buy a new system, and they're going to have to go look elsewhere. What we also know is the average ticket is going to be a lower ticket. It's going to be because they have a limited amount of funds that they can spend when it's just going to be a cash payment. So if I look at this first example of cash, 30 leads, I'm going to sell 9 of those jobs, so I'm going to be at about a 30% close average. My average ticket, $6,200. That means I have a yearly revenue of $669,000. When I offer financing, now more customers will be able to afford the solutions that I'm offering to them. So our closing percentage is going to go up. And let's say our closing percentage goes up modestly. Now we, instead of closing 9 jobs on those same 30 leads, we close 15. Because the customer is not worried about the money that they have in the bank anymore, and the customer can actually look at a payment, we know that our average ticket is going to also rise. And so now what we're going to see, instead of $669,000 per year, we've just grown our business to $1.3 million in just our replacement business, because we've utilized financing and we've put that in front of our consumers. So let's take a look at the specifics of what we've got here. So when I take a look at the Benji program, here's the really nice thing that we've got. First of all, it's very easy to get enrolled in Benji. The only enrollment requirement is if your state requires licensing, that you show a state license. If your state does not require licensing, there is no requirement for it right now. So you have instant approvals via the phone or using the app. You have rates at $699 and $5,710. You can have no payment, same as cash options if you want to do that. But here's the big deal. You've got no cost options at $999 and 5, 7, and 10-year loan options. So you're able to offer your customer a low payment. The lowest APR if a customer defaults on the same as cash loan is going to be $14.99 instead of the 27% that a lot of companies go to. And you can get approvals up to $30,000 with no proof of income. So with proof of income, you can get approvals for a project up to $50,000. So this is a very good program for a brand new contractor starting out, a contractor that maybe hasn't used financing before. This is a great program to get involved with and to start offering your customers financing. Next one we're going to take a look at is Interbank. So Interbank is going to give you maybe some more attractive interest rates if that's what it is that you're looking to do. They do have a couple more requirements because they are a bank. However, because EGIA has partnered with them, if you have an issue with Interbank, EGIA can actually step in and do the underwriting for you. So same as Benji, they have no cost, $999, 5 through 12-year loans, but you can get down to a lower, a $299 with a dealer buy down. They have lower dealer fees consistently across the program than many of the other lenders that are in the process. They have quick in-home approvals and a paperless e-sign process. And all of your funding is easy, and you can actually get funded for parts of the projects ahead of time before you even get started. So this is a great program, and they do have a second look program in the system. However, what you need to be aware of is if you do go ahead and engage that second look program, you will have a dealer fee that is at 11%. So that is something you have to opt in for. So if you choose not to opt in for it, you don't have to participate in that, but they do have that available if you're just looking for something to streamline your process. GreenSky, the requirements are you need to be 2 years in business, $200,000 in annual sales, and decent credit for the business and or the owner. They do have instant approvals via the phone, online, and smartphone app. It's a completely paperless process. No signatures are required. It's probably one of the easiest process for the techs or for the salespeople to use in the home, but they do have some funds that you're going to pay to use the financing, and because of the ease of use, it's processed like a credit card, and because of the fact that your process isn't like a credit card fees will also apply. So keep that in mind when looking at GreenSky. The benefit is it's one of the easiest programs to get involved with, but it's a program that you are going to have some fees tied to that you'll have to make sure you do account for in your pricing of your systems when you're talking to consumers about this program. Time payments is the answer for a lot of the customers that may have that challenge credit. And so the nice thing again is you have instant approvals via phone. So this is your second look option. There is a straight across the board a 5% dealer fee. So if the dealer can't get financed through traditional financing, this is an option that's going to allow you to go ahead and get up to speed on this. Again, they will approve people down to a 550 FICO score, which gives you the opportunity to help a lot of customers get into systems. Again, without you as the contractor taking the risk, you get paid right away up front. There's no income requirement. Clients not asked for that. They do get a payment, and the APR is solely based on that person's credit profile. So if the customer has decent credit, they're not going to pay too terrible of an interest rate. But as the credit gets worse and worse, you will see the interest rates start to creep up on there. You do get funding for the job within 24 hours of completion, and they'll cover repairs, and they'll do transactions from $500 all the way up to $100,000. Because it's structured as a lease, there is a dollar buyout at the end of the lease term, but there's an online quote tool that makes payment estimating really simple. You go ahead and put in the amount that you're looking to get financed, and it will show you how much the customer's payments are going to be. The enrollment requirements for you is 1 year in business. There's some leeway on this, so talk to EGIA about that, and then also a license if that license is required by state. So some of the difference between time payments and Mycroft, really it's a simple program because there's not much. You have the application that you're going to go ahead and have them fill out, and then they get the credit decision up to $10,000 within seconds. They support A through D credit and transactions starting as low as $500. So that's really easy for you. 100% funding within 24 hours of the completion of the project. So this is a way that you can make sure you're going to get paid for the work that you do. When we look at their table, they do have a table that you can look at. Depending on what credit the customer has, you can go ahead and multiply whatever the project is going to be by the multiplier that you have in the table and figure out the customer's what their monthly investment would be. But one thing you should know about this when you are starting to deal with customers that maybe have had a hard time with their credit, that the payment is going to go up. And so now you may not be looking at $100 or $150. It may be a $400 or a $500 payment, depending on how much the customer is looking for and what you're and how long you're going to go over with that. So, I mean, you look at it, you've got 2 years through 6 years, so you don't have as long of a financing term dealt into this. But it's a way a customer can get into a system when that emergency arises, and you can still be the hero and take care of them. Balboa Capital is a company that we work with for the commercial leases. And so they have leases that start as low as $5,000 in the commercial realm. They have terms up to 60 months with extended terms available if needed. They have competitive interest rates. It's a very simple application. There's no financial statements required for projects under $150,000. And they can work out with some progress payment options if the customer is looking for some different things, and also some pre-funding for you in the project. If it's going to be a multi-month project, you could look to get paid for some of the stuff up front so that you don't get behind on the job waiting for your payment at the very, very end. So another great option talk to EGIA, and they can get you in touch with Balboa, and Balboa can help you look at programs or projects that maybe you weren't getting in the past because the customer wasn't quite sure on how they were going to fund the project. So how do I sign up for EGIA? It's really simple. If you go to www.egia.org/Goodman, you'll come right up to the programs, and you will see all of the programs that you can sign up for, and just follow out the online form. Once you get that submitted, usually in about 2 or 3 days, you'll be all set up and you can start offering financing. Thank you very much for attending today's webinar. At this point in time, I'd like to open up for any questions that anybody may have.
Sounds great. Thanks so much, Ben. So just a couple quick reminders. If you have any questions, use your chat box. We'll be happy to answer for you. Also, you will receive a follow-up email a little bit later today with a link to the webinar recording. In case you're not aware, anytime you register for a webinar, whether you're able to attend or not, you do automatically receive that follow-up email with a link to make it nice and convenient so you can watch at your convenience or perhaps share it with someone who might be interested. Also, we do post webinars out to PartnerLink. If you need any assistance locating those recordings, you can always reach out to me at Goodman Partners Network at goodmanmfg.com, and I will be happy to assist. And there is a post-webinar survey, so definitely we always appreciate your input. So one question, Ben, is there's a person out in the field who wondered if they can get a copy of the slide deck.
Absolutely. Like you shared, Catherine, it will be available as a YouTube, but if somebody wanted to get a copy of the slide deck, I can go ahead and post that up on Showpad, and then your territory manager would be able to get that over to you.
Perfect. So Paul, touch base with your TSM, and we'll get you that. And for now, that is all that I have in terms of questions. We'll give folks another couple seconds. I did want to mention again, we do post recordings at the PartnerLink. PartnerLink itself recently changed. If you're looking for webinar recordings, you can go ahead and log in. On the left side, when you log in, there's an option to go to the legacy system. So you're going to go to the legacy login, and then you'll be able to find webinar recordings under the training menu, and make sure you change that drop down to recorded webinars. If you leave it selected as webinars, it's looking at what's in the future. So just a little tip there. So another question that came in, how does pre-funding work with EnerBank?
The pre-funding that you may have with that. So if you go ahead and sign up for a project and you want to tell them that, we need a cost, I believe you can get up to 50% of the project pre-funded through them. So basically, the customer's approved, you go ahead and you can get up to 50% of the money up front, and then when it's completed, get the balance of it.
Perfect. So again, just wanted to give folks a couple more seconds if you had anything else. Also, if you leave the webinar and you think of any other questions, you can always tuck those questions in the post-webinar survey. I'll be forwarding that over to Ben. Or as I said, you can always reach out to me at Goodman Partners Network, and I can forward it on. So with that, Ben, oh, no, we did just get one more question. I thought I should do a little filler here just to be safe. So this question, just to be clear, will we only be able to go to PartnerLink for the, sorry, yes, to be clear, will we only be able to go to PartnerLink for the recording, or will it come via email? It will come via email. I automatically do that with each webinar that we have for dealers and distributors. So today in about 2 hours, you'll receive an email. It'll be from GoToWebinar, and it will say something to the effect of, thank you for attending the webinar. In the body of that email is the link for the YouTube recording. I also do post those out to PartnerLink. So if you wanted to go out and find this or any other of our library of recordings, again, that was why I was mentioning, because there is a change recently in how it looks, you're going to want to go to the legacy site and look for recorded webinars. But in terms of today, again, you'll receive that automatically. And you're welcome, Steve. Sorry for any confusion. Okay. So Ben, anything you wanted to say in closing today?
No, I just wanted to thank everybody for coming today. And I guess the one thing I would say is we know, from a manufacturer standpoint, that probably less than 10% of the total transactions that are done through our whole entire dealer network are financed today. And so there is a ton of opportunity for us out there as contractors, and that's indicative of the industry as a whole. So if you're looking for a way this fall to differentiate yourself from all of your competition, and wondering how some of the other guys may be growing their business in your particular marketplace, it's really no secret. Offer financing every single time. And instead of talking about the big price at the end, start talking about the monthly investment that they'll have to have the system that they want to have in their home. And I know that you'll be a lot more successful this fall.
Agreed. I think the statistics are millennials in particular finance everything. They're just used to doing it. So I know.
Well, it's not just the millennials anymore. It's across the board that we're seeing it, and it's really indicative. We take a look at one point in time. It's what they're calling the post-recession consumer. Financing is something that more and more the post-recession consumer is taking advantage of.
Perfect. And Steve, I see your additional comment. I will forward it on to Ben and make sure that he gives you a call. So awesome. Well, thank you so much, Ben. Appreciate it. Lots to think about, and hope everyone who joined us today did get some ideas about types of financing you can offer, and I hope it makes you have a much more successful fall. And with that, thank you so much for joining, whether you're here live now or later on the recording. We do appreciate it. And with that, we'll talk to you on the next webinar. Thanks so much, everybody.
All right.
Have a great day.
Thank you.
Bye-bye.